Chenzo's Go Crypto Investing. Remember, for the most up-to-date breaking news, truth and integrity, non-biased, non-paid promoter, and calls out all the shills, shysters, and fleecers and criminal gangsters that, as you know, have infiltrated the United States government, banking industries, and world financial institutions. You need to subscribe, comment down below, bell notification, most importantly, and support the channel by subscribing and like it to push us through that elusive YouTube sphere to help educate and then get in touch with more and more people. And as we can see from CoinDesk, crypto investors sour on Bitcoin fund after massive inflows turn instead to Ethereum. An XRP Bitcoin investment produced product suffered a $13 million outflow last week, buckling the trend of consecutive weeks of massive inflows as investors instead favored funds focusing on smaller cryptocurrencies such as Ether or Ethereum, otherwise known as, and Ripple XRP. Crypto asset manager CoinShares reported Monday digital asset funds witnessed weekly outflows of 6.5 million after gains of 742 million of inflows through the previous 4 weeks. The trend reversal comes as BTC, otherwise known as Bitcoin, have seemingly run out of positive news to bid on after some major catalysts in recent weeks. Global asset manager giant BlackRock filed for a long-coveted spot BTC exchange-traded fund on June 15, followed by a swarm of competitors renewing their applications. The BlackRock news spurred investors to pile money into BTC-focused investment funds over the next month at its fastest pace since October of 2021. XRP partial court victory over the U.S. Senate. SEC Security and Exchange Commission earlier this month. BTC price to fresh yearly highs before it quickly reverted below 30,000. The ruling, however, improved investors' confidence in altcoins, alternative crypto assets to BTC, which was underscored by positive fund flows through the week. Ethereum-focused investments product enjoyed the largest inflow among the cryptocurrencies, totaling 6.6 million. The growth suggested that sentiment, which has been poor this year, is beginning to turn around for the second largest asset, noted James Butterfield, head of research at CoinShare. I always like how these guys seem to have weird, funny names. XRP fund experienced 2.6 million in inflows, totaling 6.8 million or 8% of all assets under management inflows over the last 11 weeks. This implies investors are increasingly confident to the outlook for XRP. Butterfield said funds holding smaller altcoins such as Solana, Uniswap, and Polygon's Matic witnessed positive flows of 1.1, 0.7, and zero point 0.7 respectively. And that's something we're going to continue to watch over the coming days, weeks, and months to see if it can be sustained or if the outflows start to come back in. That's all very important when trying to see if the bear market is ending. And if we look at the start of this technical analysis and we look at some of the XLM, we can see the mean of the coin is sitting down here at about 12 and a half to 13 and a quarter cents. And after we have this big massive pump up that we all know, and then we had this rounding bottom with a big fucking run up, excuse my French. I know the YouTube algorithm doesn't like the language, so pardon me French. Then we had the quick turnaround. But something that you can notice, say you go into the daily time frame or the minute time frame. Look at how the chart sort of looks in the minute time frame. Let's delete that. Let's get that off. You can see the volume has almost come back to near very, very low. Like if you scroll back and you can see the volume during the pumps. Let's even go into the 15-minute time frame. You can see how much volume there was back here. See that? See how that looked? Now it's looking almost like a 1980 stock market where the volume is very, very low and the sellers are starting to come in. The trading is taking place and some profit taking obviously is continuing as the price comes down. And what we can see here is we're coming back down towards a critical support area that you would like to hold, which is about the 12 and a half to 13 and a quarter cents right here near the local mean of this recent price spike. You want to stay above that in the 4-hour time frame, but we had a nice decline today and we're trying to get a local bounce now in and around this little fib circle right here that's in the background. It's very light. I would have to zoom out to click on it, and I don't really feel like doing that. But you can see that fib circle is sitting right in there, and that's where we tried to hold some brief support. And right now, if we zoom into we'll go with a 15-minute time frame, you can see when it came down to it. Hate when I forget to do that when I'm trying to move. The 15-minute time frame, you can see that first initial wick came right on that, then it traded, got rejected, and starting to trade back down. Did breach the recent low from today, and now what we're watching out for in our micro technical analysis is, can we get above that fib circle that is uptrending, that is sitting right here, slightly uptrending at about 14.7 cents. And you can see how it slowly goes up, or is this going to continue down and must come retest the 13 and a quarter major support level down here that's at about the 13-cent level, which will make that a little bit bigger, which is right here, about the 13 and a quarter to 13.5 cents or 13 and a half cents. That is a major area of support, as this is where we got supported on the dump, the most recent dump, and that would be an area that you would like to hold, because if you could hold that, then you could attempt to try to get some buyers and some momentum to come back in and maybe trickle back up. But as you do know, as we were talking about down there, is if you don't hold that critical support level right there, your next major support level would be down here at the blue area, which will make that a little bit bigger to see, which was the 10.6 cents, which was major support and resistance for quite some time during this bear market down here. And that would be your next major area of support. As you can see, you got a little bit of volume down there if you can't hold this 13 and a quarter cents. So that's your first area to hold to try to remain short-term bullish. You need to break and confirm a hold above 17 cents to remain long-term bullish. And if you break down to the downside, to hold a bearish undertone or turnaround, you would want to hold that 10.8 cents, because if you did dip below that, that would be very, very bearish. And that's currently what we're watching out for in the XLM price. As we run down the list, the XRP price is very, very similar. You can see we've traded back down like we were talking about during this big spike right here. The volume has really come down now. We initially got bounced off the 50-day moving average in red and the top part of this blue trading zone at about the 70 to 68 cents, which this is an area, if you go into the way left machine, you can see we got rejected back here the first time on the first attempt or second attempt, I believe, back in March of 2023. Then if you zoom even farther back to the way left machine, on that first initial breakout, you got rejected in September of 2022. And as we quickly forward back to the current time frame, we had the same thing as XLM. We had the big spike, big rundown, sort of a rounding bottom. We had this up and sideways consolidation up here with a falling volume. When we talked about over the last several days, anytime you have a pump with rising volume, and then you have a consolidation and an up and sideways consolidation with falling volume, that is often a sign that the bullish action will be a bearish turnaround at the top, and it indeed did. And we've come all the way back down into that 70 to 68 top part of that blue trading zone. And something very interesting that I've noted is, as this time, when we came through here last time, we initially bounced back on top of the blue trading zone, held it right there. See that? And then that catapulted us up for that local 3 or 4 day massive rally. On the return rally this time, we dipped below it, got some buyers to come in at about the 67 to 68 and a half cents, came back up to the top part of this blue trading zone, initially got rejected at that 70-cent mark. And that's something that's very critical, because if that's an indicator, that could mean that this is starting to act as resistance again instead of support. And if that is the case, unfortunately, you would have a quick, steady decline to the downside in an up and down fashion. And that might be indicating that if we zoomed out into, say, the 4-hour time frame, something that we've been talking about, we may have to come back near that 200-day moving average in what I like to call, and what I've been calling, the step down fashion, right? Where we step down to the moving averages. The first moving average in the shorter time frame was the 50. Now in the 4-hour time frame, we're at the 100. And then if we continue to get rejected and the buyers don't come back in, you might step down to the next level down near the 63 to 58 cents, the 200-day moving average in green, and or the bottom part of this blue trading zone, which would be a very critical area that you want to hold, because if you start trading within here, continue to use that as resistance. You can see the moving averages in the 4-hour time frame are starting to turn around to the bearish side, and it drives you down to the 58 cents. You don't want to slip below that 58 cents and start using this bottom area as resistance, because that could nosedive you all the way back down towards a major underneath support level at about the 42 cents. And you say, oh, Vincenzo, where does that 42 cents come from? In the daily time frame, you can see that 42 cents. We had this symmetrical triangle back here that had a 38% fall, right? Or we had the symmetrical triangle here that had a 34.02% fall during this symmetrical triangle that we were in for about 12 months right here, right? Then we had this rising channel that it broke out of and formed before the news came out with the judge that had that hyper pump, and you can see we had a nice 30.84% rise right within this rising within this rising channel. Again, excuse my language. Within this rising channel, we got to put that back on, get that back into the area, change this back into whatever color blue we had, minimize that. We'll change that later. But you can see what we're talking about here. If we zoom in the daily time frame, if this continued to the downside and you broke this 58 cents, the next logical level would be all the way back down the old major support down here at the bottom part of that rising channel. So those are what some of the things we're watching out for. And if we zoom out to the weekly time frame, even with all those inflows that we talked about over the last couple of weeks, this is something that I pay attention to because it often can tell you a lot. Like we've been going over, we had the big volume spike in 17, a similar but slightly smaller volume spike in 21, and now even with this most recent pump, you can obviously see down there that it didn't even move the dial in the terms and the respect of the weekly, daily, and monthly time frame. That's the weekly. If we go to the monthly, you can see it continues to trend down, although the volume for the last couple of months has turned green. There hasn't been the spike that you would like to see like here, and you can see this even more defined in the monthly time frame. Big spike, second big spike, and we haven't had a third big spike, but you can notice the downtrend, right? I mean, it doesn't take a genius to see the downtrend in volume, and that is something that we're going to wait to see to confirm a bear market end and a bull market rally. Is the mean of the volume in blue there to start trending up and get somewhere up into the future, and that would signify a bull market as the mean of the volume starts to trade up. Right now, we haven't noticed that. We've just noticed the price going up, and the overall daily, monthly, weekly, and even multiple month volume has not shown that big pump. You can see in the most recent 3-month time frame that it's still going down, even though it's green. Finally, for the first time in several months, it is still going down. And if we look at the 6-month time frame, you can see it looks even worse. As far as the volume, you would like to see these start to come back up with big green candlesticks, right? Similar to what you had here in 17 and similar to what you culminated with in 2021. So far, we haven't seen that. And if we go even farther out into the 12-month time frame, it even gives you an even better understanding of what I'm talking about. You can see this is the overall volume, and in the 12-month time frame, it is still red and is still coming fastly down and nearing, actually, in the last 12 months. If you look at the overall volume, it appears to be at a record low, at least to date. And that's something that we're going to be very close at watching, and that's something that a lot of people don't talk about when they're talking about the Bitcoin price or the XRP price, but that's something that obviously I'm watching out for. And it's the same thing with Bitcoin. You can see Bitcoin, on the other hand, from its first spike on this chart, the volume has been trending up in the 12-month time frame until the 2022 peak, and now it's drastically come down. And this is something we're going to watch out into the future to see what exactly happens here. And those purple lines are the happenings, right? So that's something that's very, very critical. If we look at the 6-month time frame, you can see the 6-month has a green candle, but it's very, very low compared to the rest of the volume. The 3-month time frame continues to show that uptrend that we had in volume for several years, and now it's continuing to downtrend, and that's a very, very critical thing to watch out for. And then if we go into the weekly time frame, it shows you that even better. And in the short term, what we're watching out for is what happened here as we zoom into the local micro time frame. I like to use the 4-hour time frame because it gives us enough data and enough candles to talk about what we want to talk about and see what we need to see. We had this big, long rejection area or resistance on the red trading zone, which is the mean of the volume or the mean of the price where all the trading took place. And we've initially had a run down. Now what you're going to watch out for is a continued choppy action and then a drive even lower, closer towards this old bottom. Let's get rid of that nasty little ugly hideous thing. A drive down to this old support level down here at 25,200, or you could try to come hook back up, attempt to re-break this, and if you don't, it would drive you down in a quick and swift fashion. If not, if the buyers can come in, the momentum can get in there, and some hype train baby can get in there, and some retail traders, you could try to jump up, which would be your next overhead resistance at 34,000. But something that I've been talking about that we need to pay attention for is if you continue to get rejected by this area and the bearishness and the bearish sentiment starts to take place, you could drive yourself down towards that 19,177 or the top part of this blue trading zone awfully quickly. Like, subscribe, and share, bell notification. I appreciate each and every one of you as we continue to spread truth, integrity, and the important information you need to make your next moves in your cryptocurrency accumulation, acquisition for future gains and prosperity. Peace and love.